Hi, everyone. Welcome to the South Star Battery Metals live corporate webinar. This is Will Mays with RB Milestone. South Star is focused on industrial minerals and battery metals for the clean revolution, the clean energy revolution, and is currently developing the Santa Cruz Graphite Project in Brazil, one of the premier battery metals jurisdictions in the world, and the Alabama Graphite Project in the United States in Alabama's Graphite Belt. South Star's shares are traded on the TSXV under the symbol STS and on the OTCQB under the symbol STSBF. Joining us today is the company's president, CEO, and director, Richard Pierce, who will be providing an overview and operational timeline of the current projects in Brazil and Alabama, as well as upcoming investor milestones. At the end of the presentation, we'll open it up for questions for management to address. If you're interested in asking a question or logged into the Zoom app or web platform, you can submit your question to us directly in the Q&A module. Please note this presentation is being recorded today, Wednesday, April 12th, 2023, and will soon be made available on the company's website at www.southstarbatterymetals.com. Today's call may contain forward-looking statements that are subject to risks and uncertainties that may cause actual results, performance, or developments to differ materially from those contained in the statements and are not guarantees of future performance of the company. No assurances can be given that any of the events anticipated by forward-looking statements will occur, or if they do occur, what benefits the company will obtain from them. Also, some risks and uncertainties may be out of the control of the company. South Star has a full disclaimer contained in their presentation. Lastly, RBMG is not a registered investment advisor or broker-dealer. For more information, please visit rbmilestone.com. And now it's my pleasure to introduce Mr. Richard Pierce, Chief Executive Officer and Director of South Star Battery Metals. Richard, the stage is yours.
Thank you, my friend. Great to see you. Thanks, everyone, for being here today. So I thought what we do is just kind of run through the typical presentation, again, for those of you who maybe don't know the story, and then really focus more on Q&A and give you an update on where we are in terms of construction and what's happening in Alabama. But South Star really is a production story. So we've got the Santa Cruz mine in Brazil, which is in construction. So phase one operations basically should commence at the end of this year. So far, we're through the end of March. We're on time and on budget. And then we've got vertically integrated production in the U.S. Scheduled to begin in 2027. Everybody's favorite slide on forward-looking statements. You can read that at your leisure. So in terms of the company, some of the things I like to point out was that we've got a really nice diversified portfolio of projects in strategic jurisdictions. It is a near-term production story. So again, we will be producing at the end of this year and then expanding as we move forward. It really is a perfect storm for battery metals. We've got constrained supply globally, exponential growth in terms of demand across the world. So it really is an unbelievable time to be involved with battery metals and certainly graphite specifically. We've got fantastic projects with extremely low capital intensity, first quartile of OpEx. We're approaching these things in kind of a modular construction design so that everything could be copied and pasted and scaled as required by the markets. This helps a lot with controlling cost, operations and maintenance, OpEx, et cetera. So we think this is a smart way to be able to scale quickly. Santa Cruz itself is basically set up for three phases. Phase one is 5,000 ton per year concentrate plant, $10 million CapEx. Phase two is a 25,000 ton per year concentrate plant, about a $35 million CapEx. And then phase three, again, these are cumulative values, is a total of 50,000 tons, and it'll have additional $30 million of CapEx. Overall, the strategic goals of the company is to have two mines, Santa Cruz as well as Alabama Star, each producing 50,000 tons of con, and then a value add plant likely to be located somewhere in that southeast corner of the United States. We are looking at kind of some trade-off studies, but it's likely to be located in Alabama. And this basically is fully vertically integrated production in the heart of what we believe to be one of the most critical battery metals defense space, with NASA. That Southeast corridor is really developing into a hub for all of these battery technologies. In terms of the products itself, again, think of demand basically being in two buckets. You've got industrial applications, which are high strength steels, refractories, friction products, et cetera. And this is growing at more or less GDP or little plus, little minus. In terms of the value add components, and again, this is where kind of the exponential growth is happening. 20-25% compound annual growth year over year. So this really is where the future growth of graphite will happen. And this includes alkaline batteries, which is to the tune of about 12 billion alkaline batteries are produced every year, lithium ion batteries for cars, for your electronics, for your phones, et cetera. You've got expandable and expanded graphites, which goes into a variety of different industrial products, fire retardants, et cetera, powders, dispersion. So again, we've tested Santa Cruz for a variety of different applications. We've produced batteries. We've gone through a long cycle test. We know that it works very well. We know that it's highly crystalline structure and low contaminants make it very desirable. Again, the idea is that we'll be producing a broad range of products that can be sold into a very broad range of sectors. So if one sector is hot and one is not, we're able to take advantage of those times and still be profitable throughout the ups and downs of inevitable commodity cycles and pricing. A little bit about the cap table. Again, 33 million shares outstanding, 58.5 basically fully diluted. Institutions own about 7%, 8%. Insiders own about 14%. I am one of the largest individual shareholders out there currently, about a $15.6 million market cap at the end of March. When you look out across the space, again, I think it really is an unbelievable opportunity. Graphite hasn't yet received the attention, certainly, that lithium companies have. But again, South Star is basically positioned to be a producer. And really, there's not that many other companies out there. If you look at a couple of comparables, the comparables that are actually moving towards production are worth 10, 20 times what we're worth in terms of market cap. So we think it's really a fantastic time to be involved with battery metals. And I think there's a fantastic opportunities for shareholders to get in at a very reasonable valuation. Santa Cruz itself, one of the strong differentiators we have in all of our projects is that it has unbelievable infrastructure. So we're located very close to 3 different port facilities. We're an easy day's drive on multi-lane paved federal highways to Salvador, Victoria, as well as Ilhéus. So again, we can get product to market very easily. Brazil itself also has a very large internal demand, so we can get product into Salvador, Belo Horizonte, São Paulo, again, with an easy day's drive on multi-lane paved federal highways. A little bit about the resource itself. We've got a really large land package, just over 12,000 hectares. We've got 13 claims. It's very scalable. We are planning on getting out and drilling this year as well to upsize our resource and reserve. So principally, Santa Cruz is a large flake deposit, which just gives us a little better price on the con side. So about 65% of the ore is plus 80 mesh. And Alabama is, let's say, a complementary sort of deposit where 2/3 of the deposit is fine. So between the two projects, we have very complementary sorts of grade size distributions. We've done a full suite of testing for Santa Cruz. 30 tons went through a pilot plant. We've done a full suite of battery testing, including alkaline batteries, lead acid batteries, lithium ion batteries, again, long cycle testing. We know it performs extremely well, and it's highly crystalline with very low contaminant levels. We're one of the few companies out there as well that has product being tested for nuclear pebble bed reactors. So, Oak Ridge has been playing with our stuff and testing how it would perform for nuclear applications as well. Really, Santa Cruz is an unbelievable opportunity. It's a very mining-friendly jurisdiction. It's been producing graphite for 80+ years. We're able to tie into a lot of really deep technical and commercial value, and then leverage that for Alabama as well. It's open pit mining. There's no drilling and blasting. It's at surface mineralization, extremely low strip ratio. The flow sheet itself is a very similar flow sheet to the other Brazilian operations, with one important exception. We'll be using filtered tails, so there is no tailings dam. Basically, we'll take the water out of the tails, recycle that water, so we'll be able to take advantage of about 75% of the water that will be reused. And then the filter cake will basically be deposited in with the waste rock. Again, we're in construction. It's a fully licensed facility, unbelievable infrastructure, and a very experienced team of mine builders and mine operators to deliver on the production. Overall, the project has been completely de-risked. Again, everything's been tested. Our licenses are all valid and up to date. We're stepping into production, what we believe to be a very low risk, high benefit sort of approach. Industrial metals is really about developing commercial relationships. So this will allow us to be profitable, just selling concentrate, get product into the marketplace, and then scale those relationships as clients require more material over time. A very low environmental footprint and very low environmental risk associated with it. Very simple process. We are first quartile of OPEX, so we'll be profitable throughout the inevitable ups and downs of pricing. Extremely low capital intensity, especially compared to a lot of these projects out there, which have to invest $100 million in infrastructure, electric, water, power, et cetera. So we're able to take advantage of our location, the existing infrastructure, and the closeness really to mining jurisdictions that have skilled people. It's a little bit about the infrastructure again, because I think it is such an important differentiator of our projects compared to a lot of other projects out there. So again, we're 1.3 kilometers off a multi-lane paved federal highway. There literally is a brand new substation located a couple kilometers away. We have major port facilities such as Ilhéus, Vitória, Salvador within an easy day's drive. And just as important really is the experienced workforce that we've been able to tie into. So we've got folks that have 30, 40 years of producing graphite as well as selling graphite. In terms of ESG, again, this really is part of our corporate DNA, because we have put several mines into operations and then scaled them over time. You stub your toe a lot, and you learn many times. You learn more from things that don't work than things that do work. So we've got in place really a methodology that's really based on being a good neighbor, very open, transparent, effective communications. From an environmental standpoint, again, Brazil has unparalleled opportunities in the sense that the majority of our energy is coming from renewable sources. Where we're located, about 99% of all the energy is coming from hydroelectric power. There are some fantastic solar power opportunities out there, which we'll be looking at installing once we do get up and running. Again, we're approaching tailings in a very sustainable manner. No tailings dam. We're recycling about 75% of the water, which will decrease the fresh water that we need to make up. The waste has already been characterized as inert, non-dangerous, extremely low strip ratio. So ultimately, we have a very small footprint. The area itself is mostly cattle farming, et cetera. So it's been disturbed. So again, for phase one, we didn't have to take down any trees whatsoever. So again, small footprint, very small impact. From a social standpoint, again, because we've done this before, we will be hiring the majority of our workforce from the local region. The majority of our managers will be located there. One of the great things about the project really is that we're about 90 kilometers away from some of the nicest beaches in the world. So it won't take us too long to really attract folks that as we need to, that will be required as we scale the operations. But again, we're working with the municipality, we're working with the state to basically attract the best talent we can get locally. In terms of governance, again, we're a publicly listed company, fully audited. A lot of our compensation goals are tied to ESG performance. So this is really something that, because we've been involved in dozens of different operations and builds and constructions and things like that, we know the importance of this. We know how quickly it can go sideways on you, and we're very proactive, and we have a pretty good methodology about how we go about this. Really, the global markets are in a perfect storm. We've got constrained supply, exponential growth. Brazil itself has a large internal demand, but if you look at kind of what's happening out there, the lower figures here are kind of the refractories, high strength steels. And again, they're growing more or less at about the pace of GDP. And the rust color is basically kind of just the battery applications as it relates to EV. So again, there's a lot of upside that's not even captured here. But if you think about it, really in the next few years, by 2025, there needs to be 10 to 15 new mines built. Benchmark came out basically with kind of a neat graphic, which showed that by 2035, 97 average sized mines need to be built for us to be able to meet the projected demand. So again, on average, it takes 10 to 12 years to get a mine built and into operations. We've been involved with this project basically since 2010, and we're basically putting it in operations in 2013, and that's fairly typical. So again, I think this is the year where we slip into deficit. And again, I think it's one of those things where there's not a lot of projects out there that are going to be coming online in the short term, and we're one of the very few that can bring scalable production to the table. If you look at graphite itself within the battery metal space, again, graphite is number one in terms of percent growth. It's number two in terms of total tonnages. So for my money, it's really one of the ideal places to be. And for investors, because lithium has gone up so much in price and graphite hasn't yet, I think it truly is a fantastic opportunity for investors, much more so than lithium is, because all the pricing metrics and the valuations have just exploded around lithium. Graphite is just getting started, and really, I think a very similar thing is going to happen to graphite. Brazil is, in a really unique opportunity. It's currently ranked number 3 in terms of importance for battery metal jurisdictions, behind China and Australia. So when you look at this hemisphere and you look at proximity to Europe, it's one of the few places in the world that can supply everything that we need in terms of battery metals, including graphite. So again, it's depending on whether Mozambique is or is not producing. Brazil's been continuously producing graphite for 80 plus years, and it's usually number 2 or number 3, depending on what's going on in the world, behind only China. China accounts for approximately 70% of all the graphite concentrate, and really 100% of all the battery anode material. So again, I think there's a strong impetus out there amongst North America and Europe to be looking to diversify their supply chain and really have a more balanced approach to where these materials are going to be sourced. Brazil, again, is a unique opportunity in the sense that we have lithium mines in production, we have copper mines in production, we have graphite mines in production, nickel mines in production, cobalt mines in production. So it really is one of the premier battery metals jurisdictions anywhere in the world. And in terms of the global markets, this is kind of an interesting curve because it's really a margin curve. So the gray is really producing assets that are out there. The hatch are projects. And what it basically tells you is that the 3 most profitable operating mines anywhere in the world today are located in Brazil. We're on strike from a couple of those mines. So again, that oxide ore deposit, no drilling and blasting, good weather, at surface mineralization, low strip ratios, again, allows this to happen. And we're able to take advantage of some of the fantastic infrastructure that we have. Again, the deposit itself is principally a large flake deposit. About 65% is plus 80 mesh. Again, that just means there's better pricing for con. In terms of resource and reserves, again, 15 million tons of resource, 2.3% grade. That's very consistent with the Brazilian context. Most of that converted over, so we've got 12.3 million tons of reserves, 2.4%. We'll be mining the first couple of years at about 3%, 3.2%. We do have drills basically getting set up for 3,500, 4,000 meter drilling program, basically in Q3 and Q4 of this year. Really strong metrics, $81 million NPV, 4-year payback, post-tax, 35% IRR. We've got a fantastic partner in Sprott. Again, so we basically are fully funded for our phase 1 CapEx. Sprott provided 10 million cash for the phase 1 stream. It's our choice. We can choose between 9 and 18 million for partial funding of phase 2. So I think this is an unbelievable financing opportunity that provides a lot of flexibility. We can buy back 100% of the phase 2 stream. There's an automatic step down of 50% in the phase 1 stream once we deliver 75,000 tons. Overall, if you look at the financial impact of this, post-stream with a life of mine EBITDA margin of 51%, it again, assuming we take everything, attests to really kind of how good of a financing this was for shareholders with zero dilution associated with it. We'll talk briefly about Alabama. Again, this was a past producing mine. When you look at the U.S. back in the 20s and 30s, because of global conflicts and difficulties in shipping things, again, Alabama was one of the few producing regions in North America. We've got a nice land package here, so we're kind of located up here. Westwater and their project is kind of located down here, so we're on the northeast side of the trend. Westwater is on the southwest side of the trend. What really kind of caught my attention about the project was just how similar the geologic context was. So again, it's graphitic schist, let's say 2.5 to 5% grade on average. We basically just got done with a lot of really good work that confirmed our bench scale stuff. So we ran 3 tons through North Carolina State pilot testing program. We generated a concentrate so that we're getting ready to send that off for a variety of different battery metal testing, physical, chemical characterizations, etc. We got the maiden drilling program done, and we're getting set up basically for another drilling campaign beginning in May of this year. So again, the maiden resource estimate will be put out. The TR, the technical report, will be put out basically the end of this month. And then we'll be looking to get a PEA out in Q1 of 2024. And this drilling campaign of about 2,500 tons will be used to support the PEA and increase our resource and reserves. So this is just a real brief slide on the maiden resource estimate. So again, fantastic result. We got 22 million tons at a 2.4% average grade. That equates to basically 520,000 tons of contained graphite with a pick and strained 1.1 cutoff grade. So again, fantastic results for us. The maiden resource drilling program was 12 holes, about 506 meters. So again, if we look at the program that's set up for the PEA, that'll be about 2,500 meters. So again, we should be able to substantially upsize our resource estimate. And then ultimately for the PEA, or for the feasibility study, which we're looking to get out basically in 2025, we'll be putting in an additional 8,000 to 10,000 meters of drilling. In terms of the work that's been done, again, it's very easy to concentrate, not a lot of contaminants. We got the 97%. On the bulk sampling, again, we took 3 tons with very few rougher cleaner cycles. We were able to get the 94, 95%. So the ore cleans up really nicely. We've got 70 tons basically sitting in big bags, ready for a variety of different testing applications. In terms of upcoming catalyst, again, we're in an unbelievably good news cycle. So when we look at Santa Cruz, it's basically construction updates, commissioning basically starting in October, start of commercial production at the end of this year. We are planning to go out and drill again about 4,000 meters. So the geophysics team is basically getting ready to remobilize this month. We'll be putting in about 3 kilometers of a combination of IP plus electroresistivity. So we did a couple test sections and it lined up really well. We put those results out on social media as well as in a press release. So again, it lines up really well. It helps us better locate our drilling program. So now that we've proven that up, we're going to go out and do about 3 kilometers of additional lines and then finalize our drilling program. We are working through some optimizations on our value add products, particularly as it relates to some of the alkaline batteries as well as the expandable graphites. And we will be doing a trade-off study looking at purification technologies, be it chemical, thermal, or caustics, as well as shaping technology. So when you think about SPG, which is spheronized purified graphite, basically you're making these oval shape snowballs. So you're basically knocking the edges off and then you're rolling it over on itself to make basically spheronized graphite. We want to make sure that we're basically getting the best equipment to be able to have the best yield on the spheronization process. So we think we can get somewhere between 60 and 65% yield. So meaning what goes into the front end of the spheronization product, about 60 to 65% of that would then spheronize and be able to be used for battery anode materials. So again, that's part of the trade-off study we'll be doing, as well as looking at coating technology. So a lot of lab work coming up for us. The mining permits for phase 2 and phase 3 have all been submitted or in review. We are just getting ready to submit the environmental permits for phase 2 and phase 3 to municipality. We anticipate that we should have all of our permits in hand basically by the end of this year, about the same time that we're commissioning our phase 1 plant. We obviously have a lot of advanced conversations going around commercial agreements and offtakes. And then ultimately, again, the idea is that we will be putting out a bankable feasibility study incorporating phase 2 and phase 3 operations. When we did the PFS, it was really phase 1, phase 2. So we've added phase 3, taking us to 50,000 tons of con, and then the board can make a decision in terms of go, no go. And again, with the approach we're taking, we'll have a balance sheet, we'll have clients, we'll have pricing lists, so that we should be able to get very reasonable financing terms around the expansions. In terms of Alabama, again, fantastic results so far. We got our maiden drilling program done. We got our maiden estimate done. The technical report will basically come out at the end of this month. We are looking to get our preliminary environmental characterization done here shortly. We have done our 3-ton pilot plant. Ultimately, what we're likely to do is take 40 tons of the material that we've already got sitting on the deck, ship it to Brazil, and use our plant here as basically our large-scale pilot test. And then we're basically getting ready to start the value add, physical, chemical characterizations, et cetera, getting that kicked off this month. So I think it really is an unbelievable opportunity for the markets right now, and South Star is very well positioned to take advantage of some of the macro trends that are there. Santa Cruz is basically going to be starting cash flow at the end of this year. Will be first quartile of OPEX, extremely low CapEx, robust economics wrapped around that. It's a really scalable project. Again, we'll be going out and drilling to prove up additional resource and reserves. We've got phase 2 partially financed with Sprott, so about 65% of what we need for phase 2 is already lined up. We've got a diversified portfolio of projects both in the US as well as in Brazil. So when you look at the Americas and the proximity to Europe, we've got a fantastic portfolio of strategic projects that can supply graphite in the short term to these markets. We're able to take advantage of great infrastructure, great logistics, and really Brazil is one of the best jurisdictions anywhere in the world for battery metals and certainly graphite. We're able to hire unbelievably experienced folks that have been producing graphite and selling graphite for a long time. And in terms of the timing, again, it couldn't be better. I think this is the first year where there's really a deficit of graphite. We've got exponential growth coming. You look at the US, again, the funding potential associated with the IRA as well as the DoD, the DPA funding is unparalleled today. And I think that's, drawing a lot of interest to the battery metal space, but certainly to graphite. And again, we'll be one of the first movers out there so we can take advantage of that funding alternative. And when you look at the United States and certainly North America, Bama Star is today one of 3 projects in the US with a defined resource estimate. So again, we're on private mining claims, we're on private property, we're nowhere near navigable waterways. We think we can get this permitted 100% at the state level. So again, the approach is the same as in Santa Cruz. We'll start off with, phases, modular approach. scale up as required by clients. And we think this is a really smart way to allocate capital, and it's really allows us to get in production quickly. I think we've got a management team that are proven mine builders, mine operators. We financed several projects. We have a lot of skin in the game. So I think we align well with shareholders. In terms of the opportunities in the market, I think graphite is unloved, but that's quickly, I think, going to change this year as we're actually in the first year where there's a deficit of material. So again, whether it's going to do 10 times similar to what lithium did or a couple times, I feel comfortable saying all we know is that for sure the price is going to go up compared to where it is today. And SouthStar will be one of the first people and companies that can provide material starting at the end of next year. So that's basically the presentation. We're happy to go through questions.
Great, thanks, Richard. This is a very thorough and interesting presentation. We are now going to move to the Q&A portion of the webinar. So if you're interested in asking a question and are logged into the Zoom app, the web platform, you can submit your questions directly to us in the Q&A module. We did have a few come in prior to and during the webinar. So would just start off here, and I know you addressed several of these already in the presentation, but it might be worth just delving into a little bit further. First one was on Santa Cruz. Would you mind updating us on the latest geophysical survey results and when additional drilling will commence at Santa Cruz?
Yeah, so we put out a press release as well as some stuff on social media, and we found that the combination of IP together with the electroresistivity really gave us good correlation. So we ran 3 lines basically over known geologic sections, and then we compared those to the geologic sections that we had from drilling. So we knew where the ore body was, where there was good grade, where there was waste rock, etc. And then when we ran those lines, we got pretty good correlation, really. So the idea behind the geophysics is it allows us to go out and really target our future holes better, so that we're more successful in increasing our resource and reserve estimates. So now that we've kind of gotten a level of comfort around that and proven it, basically what we're scheduled to do is this month the team will remobilize and we'll go out and we'll put in about 3 to maybe 4 kilometers of additional geophysics. And then on the back of that interpretation, we'll be setting up our drilling program. So again, we're looking to upsize our resource and reserves. Ideally, we're getting both deposits to the point where we've got 1 million tons of contained graphite. And with that, we'll have very long life mines and able to justify the additional capex associated with the value add plant. But so far, really good results on the geophysics. And again, we're going to be using that in Santa Cruz to basically help us target our future drilling program. And that's out there, Will, on the company website as well as on social media, those results, if anybody's curious to see what it actually looks like compared to the drilling results that we got.
Perfect. Similar question on Alabama. Can you give us an update on the upcoming drilling program?
Yeah, super excited. The maiden drilling was so successful. Again, all 12 holes hit mineralized intervals, significant mineralized intervals. Again, we were able to get 22 million tons of resource. So pretty excited about getting back out there and putting some more holes into it. So unfortunately, with that deposit, there's some sulfides deeper that kind of distort the geophysics. So it hasn't been particularly useful to go out with geophysics there, but we're still going to be playing with some alternative sorts of geophysics out there. But the idea is we'll be back out in May, same driller, same team, basically looking to put in about 2,500 meters of additional drilling. And again, the idea is that we'll be looking to kind of upsize that resource estimate to, ideally around 1 million tons of contained graphite. Again, that'll give us a very a long mine life and the ability to support the additional capex around the value add plant. And ultimately, the PEA that we'll be putting out in Q1 of next year will be presenting that overall plan of both mines, each producing 50,000 tons of concentrate, plus 60 to 70,000 tons of value add material. So compared to what we're presenting today in all of our studies, which is just concentrate, this will be a significant increase in both NPV, IRRs, and the overall capital intensity, things like that. So this should be pretty exciting studies coming out in the future.
A couple of questions on macro trends. Investors are interested in what you're seeing out there in the market. Are you seeing more capital being attracted to the sector, things like M&A, things like that?
Yeah, I think in general, I think we're kind of in the lull before the storm. We're in tough markets for sure. I mean, rising interest rates. You've got banking crises. You've got Ukraine, Russia. You've got U.S., Taiwan, China. But interestingly enough, you've got a ton of support being put into supply chain, critical metals, and a more balanced approach. So I was reading today, China put in a ton of restrictions on exporting critical metals. So I think, for all the the horrible things the pandemic brought about, one of the great things was, jurisdictions, companies, countries really thinking more about their supply chain and having a more balanced approach to where materials, be it feedstock or midstream, downstream products, are going to be sourced. And combined with that, I think you've got in the U.S., the IRA plus the DoD through the DPA. So again, the Department of Energy has very low cost loans, and the DoD, the Department of Defense, through the Defense Production Act, is providing basically grant money. So just again, briefly touching on those things, the way that it sets up basically is the DPA has this year, 23, has $1.3 billion set aside. As best as we can tell, it seems like there's 12, maybe 15 projects that they're looking at out there. And again, basically it's a dollar for dollar match grant. So say, for instance, we asked for $200 million for our facilities. They would basically have the ability to write us $100 million check. And for every dollar we spend, they spend $1. So that money has already been budgeted, it's earmarked, it's in the bank, and it's ready to go. So the process is, submit a white paper, submit, basically a proposal for what you want to do. They'll evaluate that and then get back to you. They're looking to allocate all of that capital, basically, I would say in June, July, August timeframe is our understanding of it. So again, I think we're very well positioned to be able to take advantage of that. The great thing about the DPA is that they will go upstream to the mine. So in general, the Department of Energy is focused on midstream and downstream. So they want to take feedstock, meaning they want to take concentrate, 95% concentrate, which is what we'll be producing this year in Santa Cruz, as well as what we can produce in Alabama. So you take 95% concentrate and you upgrade it to 99.95. The DOE is really focused on midstream and downstream. So they want battery anode material, be it uncoated SPG or coated SPG. And they have very low cost loan opportunities out there. A few of those awards have already been awarded. So the way they kind of presented ideas to us was for the mine and the investments associated with the mine, speak with the DoD and the DPA program for those grants. With your downstream processing facility, speak with the DOE about potential loan opportunities. And that's kind of the way it stacks up. So the DPA, again, has $1.3 billion already funded and ready to go. The IRA has to the tune of about $35 billion that's been set up. So unbelievable opportunities in the US. And again, we're one of 3 projects that has a defined resource. And again, because I think we're on a unique set of circumstances on private property, on private mining claims, not near navigable waterways. I don't have to do a full NEPA 404 process. We don't have to involve federal permitting agencies based on the initial consultations we've had so far. So again, I think we have a strong potential to be also one of the first producers in North America and certainly the US. So when you look at that space, phenomenal opportunities associated with Bama Star and what we're doing there. Canada just is announcing, I think, 1.4 billion Canadian for similar sorts of incentives. And the EU, I think, is looking to do something similar to that. So again, unparalleled opportunities for battery metals. And I think there is a real recognition of trying to diversify their supply chain and have a more balanced approach to it. And again, South Star is unbelievably positioned to take advantage of it. For investors today, I'll say this to them. Again, we're trading at a 25% discount to our cash position in the bank. So you're getting Santa Cruz cash flow at the end of this year, plus the Alabama project for free right now. And yet you're still getting a 25% discount to the cash that we have sitting in the bank. So for investors sitting out there, unbelievable opportunity to get in at very, very reasonable price. Again, where we are today, I think compared to where we are at the end of 2024, 2025 will be very different. So again, I think it's a fantastic opportunity for investors to get in at one of the most opportune moments, let's say. So take advantage of it would be my suggestion there. In terms of M&A, I haven't seen a lot of activity. Well, it hasn't been any activity really in the graphite space. There are some conversations certainly in the lithium space. Vale is basically spinning out their base metal operations. So if you look at their iron ore operations versus their nickel copper operations, that's a done deal. So my understanding is towards the end of this year, basically, the copper and the nickel assets will be spun out of Vale, and that will be separated. But in terms of big mergers and acquisitions, really nothing happening that I've seen in the graphite space. And there's some conversations around the lithium space, but nothing significant that's been announced. There is some funding around royalty companies and things like that, but for the most part, it's been quiet. I think principally just because of the market conditions we're in and the headwinds that we're facing, but that is likely to change here over the second half of this year and moving into next year, but time will tell.
Great, thanks. We're going to stick with the macro questions here, and a couple of questions came in regarding the regulatory and business climate in Brazil and Alabama. One investor was asking also sort of with the developments of what's going on around, with China, the BRICS, the Western countries, what are your thoughts on that?
Sure. No, I think if you look at Brazil, I was here again. I'm based in São Paulo. I was here in 2008 when Lula was previously president. I haven't really seen any significant things to be concerned about. It was fine in 2008. I'm sure it'll be fine now. Nothing is really making me think that there's something on the horizon that we have to be careful of. But again, it's the first thing I check every morning is FX. So it's been pinging around really between a pretty tight range of let's say 525 to 540, somewhere in that range, and then recently it dropped off below 5. So again, I think the Brazilian banks are basically betting that the Fed is not going to raise anymore, is my interpretation of it. So if you look at the FX, it's about a 4.95 or something like that. I mean, we were really watching FX carefully. So again, very blessed to the sense that we brought in a huge chunk of cash that we needed at a 540 exchange rate, able to take advantage of some of those windows of opportunities there. And the great thing about Brazil is that you can put money in the bank in a certificate of deposit and earn a point a month. So we're basically earning, 12%, 13% annual interest rate on a bank certificate of deposit. So we were able to take advantage of some opportunities there. I think, for the most part, we're so far advanced on all these projects, and all of our mining reports have been submitted. They're in evaluation. Again, we should have those in hand basically end of this year. So nothing really out there on the Brazil front that is of concern at this point. And I think the exact opposite, actually. I think there's going to be an impetus to explore more, expand projects, and really take advantage of this moment, because Brazil really does have some unbelievable opportunities. On the Alabama front, again, unbelievably supportive initiative so far from the state. We were able to meet with both senators, several of the representatives there. We got a strong letter of support from the senators to the actual DOD for moving the project forward and evaluating the funding alternatives for the DPA. So both from a state level as well as the local level, we've had nothing but fantastic support. And again, because we're on different than, let's say, the Western US, where there's just so much Forest Service land, there's BLM land, et cetera. You have to deal with federal agencies. The area itself is mostly white pine. So this is basically a forested area for paper and pulp. And periodically they go in and they clear cut these regions, and once every 20 years they go cut the trees down. So this is not native growth. It's rolling hills, good infrastructure. We're close to some population centers there. It's a mining district itself. The marble that comes out of that region is absolutely gorgeous. So again, we're able to take advantage of a bunch of really good infrastructure with folks that are experienced with mining in a region that is excited about development, has experienced folks that we can tap into. And we've had nothing but really supportive conversations, both on environmental permitting as well as the mining front, and moving the project quickly. So again, I think with all the impetus to diversify supply chains, particularly in the US, with the possible funding mechanisms that are out there, spectacular opportunity.
Perfect. Thanks. We've also got several questions came in, somewhat related, again, sort of macro related. The first one was on battery fires. Has that sort of changed any effect or changed the price of the product? Also, related question is that there's been a lot of research and development going on as far as new battery materials, new battery technologies. What are your thoughts on the risks associated with that?
So let's split that in two, I guess. When you think about qualifying your material, graphite specifically, let's say we're producing coated SPG. We're talking with Tesla, Ford, GM, Volkswagen, Mercedes, Stellantis, et cetera. They all have their different spec material that they want, and they all have their sort of gated approval process out there. And the typical approach will take anywhere from, let's say 2 to 3 years on average. And what you basically have to do is show them that your material plays well with all the other materials. So, give me a couple 100 grams, give me a couple kilos, give me half a ton, then send me 5 tons. And so they'll just kind of work through building larger and larger and more batteries to test. Because these battery packs, think of it like really big AA batteries that have, lots of them together that then become battery packs, and then battery packs become battery cells. So it basically, it's a bunch of like large size AA batteries for folks that have never seen them that get stuck together, and then that's basically what becomes the battery pack. So, you know, some of them have different size requirements, some of them have different, you know, density requirements, purity requirements, et cetera. When you look at that and all the things that you've got, you know, the cathode side, which is really where the lithium goes for the most part, and other elements. You've got the anode side, which is, you know, whatever, 95 to 98% graphite. Then the anode itself is many times a blended anode between a synthetic and a natural flake graphite. And then you got the electrolytes. You got a lot of physics, material properties, and chemistry going on. And the last thing a car company wants is their, you know, a car of theirs on the side of the road on fire. So, you know, specifically to that question, no, I don't see anything changing the price of it. And I think it's really going to be driven by supply and demand as we move forward. And you know, the price, is it going to be 2, 3, 5, 10 times? Don't know, but it's going to be more than it is today. I think all the car companies are going to be working hard really to focus on decreasing that overall time it takes to qualify your material. And, you know, if that means standardizing certain things or being a little bit more flexible on the approach, I think that's going to happen to the point where I think in the not too distant future, we can get material qualified in, let's say, 12 to 18 months. But overall, all the car companies are the same. And all the car companies are basically, for the most part, third-partying their battery production to others. So when you look at LG, when you look at POSCO, when you look at Panasonic, BYD, et cetera, the OEMs have basically used third-party manufacturers to supply their batteries. And they kind of have this symbiotic relationship, but, you know, at the end of the day, it's LG, you know, think of it this way, there's, you know, a couple companies in Japan, a couple companies in Korea, and then the rest is China. So China is about, you know, let's say 85% of all the battery production. Then you've got a couple companies in Korea, and you got a couple companies in Japan. So that's it for the battery manufacturing. And in fact, in the US, for the most part, it's those same companies which are setting up the gigafactories. And that's really what's happening here. So, you know, if you look at that process, I think the trend there is likely to compress the qualification period. It's going to be the same folks dealing with the same processes, but, you know, hopefully we do it faster. You know, that, I think that'll be good for industry. What was the second part of the question again? Sorry, Will.
I think you addressed it. Was really to do with the alternative battery.
Oh yeah. So again, if we think about alternative batteries, there's 305, you know, ballpark, more or less, little, you know, plus or minus. There's 305 gigafactories in construction today worldwide. And they're all, for the most part, being built on traditional NMC or LFP battery technologies. You know, so if you think of the trillions of dollars that are pouring into battery manufacturing facilities, for us to be able to scale this demand, there's certainly a lot of really interesting technologies out there that potentially could significantly increase performance, or even marginally increase performance. But really, what I see over the next, let's say, 7 to 10 years is more of the same, and then we try to improve the battery technology around that. You know, 10 years beyond, yeah, I think there could be some new battery technologies that get adopted. But if you think about the trillions of dollars that are being invested in current plants, plus, you know, 2 to 3 years for any new technology or more to be tested and proven over time, I think what we have today is what we're going to have for the next 7 to 10 years. And certainly there's lots of technologies and lots of ways to improve, let's say, the existing blends. But I think a significant change, I don't see that in my professional lifetime. And in terms of the battery anode, is it 95% graphite, or is it 90% graphite with some silicon and some others to dope the performance specs? And when you think about it, natural flake graphite accounts for today, let's say 45% of the battery anode for EVs, and synthetic accounts for the balance, let's say. I think as companies, particularly around ESG and some of the drives toward lesser carbon footprint, lesser energy, things like that, it's likely that basically that relationship will invert, so that 50-55% will be natural flake graphite, which has a smaller footprint associated with producing it, versus petroleum products or coal products. It's pet coke, needle coke, those sorts of products that then get graphitized at extremely high temperatures. So I think overall, the anode itself is going to be mostly graphite with some other elements thrown in to dope the performance. Likely to be a blended anode, but I really don't see anything out there changing, really significantly in the next 7 to 10 years. Particularly if we want to be able to bring this level of increased supply chain online. I mean, it's just there's a lot of balls in the air right now.
Perfect, thanks. And we've got time for one last question. The question is, can you provide some key points on why now is a compelling entry point for investors, and also some milestones to look forward to over the near term and longer term?
Sure. I think if you look at Santa Cruz, it's in construction. We'll have commercial production basically at the end of this year. First quartile of OPEX, very low CapEx, robust economics, really large scalable asset. We're partially funded for phase 2. So again, within the Americas, it's one of the few projects out there that will be bringing new material to the markets, and it's really the only one in the Americas. So around the globe, there's a few. We're one of the few. So I think Santa Cruz is an unbelievable opportunity. Bama Star itself, again, is one of 3 projects in the entire United States with a defined resource. Again, because of our location, the permitting requirements around it, we think we can get that up and running basically in 2027. So we've got an unbelievable portfolio of strategically located projects within the Americas. So for companies and countries that are looking to diversify their supply chain, be that the Americas or Europe, we can take advantage of some inherent logistics advantages compared to bringing material from Asia and other places. We've got great infrastructure that we can take advantage of, experienced workforces. So again, I think it's a really fantastic mix of projects. There couldn't be a better time in terms of bringing projects online for graphite. So again, lots of constraints around supply, exponential growth in demand. We've got some unbelievable opportunities associated with either the IRA through the Department of Energy or the DPA through the Department of Defense to be able to help fund these projects at a very low capital cost. And there just really isn't a better time to be associated with battery metals as we move forward through the next decade. You've got a management team that's well aligned with shareholders, very experienced mine builders, mine operators, and financiers. We've got a very experienced commercial team that is able to place material into the market. The phased approach, I think, is essential to our success. At Santa Cruz, we're profitable at 5,000 tons or even more profitable at 50,000 tons. So there's most of these other projects out there are just focused on battery metals. We can make money on con and then scale as required. Then when we look at funding basically the downstream facility, we already have cash flow, we already have a balance sheet, we've got clients, we've got pricing, so the banks can look at it, financiers can look at it and say, yeah, I'm comfortable around what this is doing, and we can get a very reasonable cost of capital to stand this thing up. And the phased approach allows us to do this in a more disciplined manner that I think is more realistic with the financing alternatives that are out there. So Again, fantastic opportunity for shareholders to get in at a discount to our cash flow. Two great projects, scalable assets producing at the end of this year, and a team to deliver on them.
Perfect. Thanks, Richard. Thanks, everyone, for joining today's webinar. And today's webinar recording will soon be made available on Southstar's website. And if you have any additional questions or any questions that haven't been addressed on the webinar, please feel free to email us at southstar@rbmilestone.com and at southstar@marvmilestone.com. And thanks again, everybody. And this concludes today's webinar. Thanks again, Richard.
Thanks, Will. Thanks, everyone.